So yesterday we have one of the most important piece of macro data available out there, NFP, non-farm payroll. And believe it or not, a lot of the media that were talking and also in financial Twitter that were discussing and expecting somehow, I have no idea how, why, they were expecting a reading below 100,000. The reality is that the consensus expected 145 and the market came in around 135, 136. Now, what does that mean? It means a lot of things. One, CIBC, actually one of the investment bank out there, very important bank, they actually said that this would put on hold all the Fed opportunities to cut rates in October and December. And that translates into bad calls for the stock market, basically because there's no more juicing from Jerome Powell. Now, what you have to pay attention is what's about to happen. And I gotta tell you, the Dow Jones will make you cry in October. And we're about to expect a 2,200 drop in this index. And I'm gonna show you exactly how that's gonna happen. I want you just to be prepared, because if you're not prepared, you are going to cry. It's going to be very bad for your portfolio, and you need to prepare yourself. I'm going to show you how you can actually do some hedge. Prepare yourself to do some hedge. We're going to talk about currencies. We're going to talk about CFDs for audience in Europe, and I'm going to talk about also futures, if that's something that you like to trade. All right. Before we begin, as usual, my name is Jose Ricardo Tejada, and I'm directly from King's Landing, Dubrovnik, in the Republic of Croatia. I want to thank you for your time. I want to thank you because I know that there are so many things. We're living in a hyper distracted society, and there's so much to do out there, and nobody really cares about making money in the markets. They do, but the reality is that no one wants to take risk. So today I want to show you how to protect yourself, how to measure your risk, and what I do believe is the direction of the markets in the next at least probably 4 weeks, at least until November 5th of this year. And as usual, before I continue, remember, all the videos are for educational purposes only. I know that you're looking to make money, so if you do decide to use this, rest assured, we have no liabilities, okay? You're responsible for your own money, and I'm not a financial advisor. I trade, I do analysis, I'm a product manager, but that's it. That's all I do for the war room, okay? Now, also, never forget, past performance does not constitute future, actually present and future performance, okay? Now, let's begin. I'm going to go directly. I'm going to share with you what I think is the first piece of the puzzle. Actually, we're looking at a fundamental view, and this one is coming from Tom McClellan. You can go to his Twitter account, McClellan Oscillators. He has been working for, the McClellan Macro Report for a while. And the most important is this tweet. I've been following him for like 2 years now, and he's always to the point, and he gives me a lot of the background, the fundamental correlated asset analysis that I need, that actually makes the war room special. It's really special because it's not just about looking at chart formations. There's more on the background that you don't see, you don't understand. And this chart is very important because what Tom is telling us is that pretty much we have to expect there's more room to go down. That's pretty much what it is. And based on this idea, there's a combination of forwards and all this information about bonds. But he's basically saying this: the 3-month T-bills have dropped more than 25 basis points in the last 2 weeks. There's still more drop to come according to this leading indicator. And that has to go directly to the stock market. So I'm using this information to measure what may not happen to the stock market. And if this is correct, we are in fact in the presence of more pain in the markets. Now, I want to show you my second piece of information, and it comes in the form of studying the US dollar versus the Japanese yen. Now, I know you probably don't want to hear this, but this is the way it works. This is the currency that investors use to park their money. Yes, they use the yen. The yen is a risk currency. So if there is uncertainty out there, what do you think investors do? Yes, they buy yen. So that's what they're doing. Here's the funny thing. Now, in the last 2 days, the market went up, reversed, and sort of recovered all those losses, almost 1,000 points. 1,000 points in almost 48 hours. And look where is the dollar versus the Japanese yen. It's below 107. Why? So here's the logic about this. If the US dollar against the Japanese yen in the presence of sort of decent non-farm payrolls figures, it's still trading below 107, we have to wonder why the index is up. So if the index is here, and then you have the dollar versus the Japanese yen trading below 107, these two cannot be true. Someone is lying, and I'm pretty sure it's the index. And I'll tell you why based on price rotation as well. I'm gonna explore for you the price rotation idea. So let me just show you. We're gonna go on the Dow Jones, but I want to make sure you understand. If this recovery in the index, for example, the S&P 500, because I'm going to study with you today the Dow Jones. If that's were to be true, why? Keep in mind, why is the Japanese yen, the US dollar is Japanese yen below 107? It makes no sense. This is wrong. Something is about to happen. And now let me show you. Let's go directly to an analysis. I have my analysis price rotation. I have it right here. I'm just going to give you details of that, how this is going to unfold, because I already have this designed for War Room paid members and how I go step by step to analyze this. So I'm just going to give you an idea of what you have to expect and why. So we already have two fundamentals views, one from Tom, one from asset correlation with the dollar versus Japanese yen. Now, the third figure I want to go over is price rotation. Now, we have to look into this. First, this price rotation goes from 26,697 points and then all the way to 21,480. Now, this is a range. Full rotation, it's about 5,274. And I make no mistake, I do think the Dow Jones is heading to at least 30,000. I think the surprise this year after this deeper correction will be 28,000, closing in 2019 by Christmas. This will be a surprise. But before that, remember, before the market does this, it has to absorb liquidity, and you are that liquidity. Traders, institutions, they provide liquidity, and then the market continues. Now, right now, it hasn't provided an entry that is worth fresh cash. Keep that in mind. We are trading at relatively, if you see here, look at this, similar levels that back in January 2018. That doesn't make any sense. Would you risk money at this level? It's almost too close to the high. And remember, how you make money in these events? You buy low and you sell high. We are not low enough to attract enough cash, enough fresh cash. And if that's true, then we need to drop enough to make things attractive. How low are we going to go? That's the question. How low? And that's what we have to look now. Now, pay attention to this. This is the rotation, okay? Now, I'm going to assume you have the rotation comes all the way from this right here, January 2018, the high 26,655 points. And now, what we have to look is this. What is the market doing right now? The market is in this rotation. There's a minor rotation from this correction, comes all the way up, and then it corrects to this point, and then continuation. Okay? That's what the market is doing. Now, this is the opportunity. This is the market being efficient. It's allowing you to participate. When the market just goes in one straight line, where there is like a big pop or is a big crash, it's an efficiency because it doesn't allow you to participate. It doesn't need you, actually. It has been building up at this point and at this point. But now the market is consolidating in different, can call it pullbacks. And now we need to have one more pullback. Why? Because as I said before, this is too high for you to risk money. You need to have something like the stock market requires to be attractive enough for you to risk money. No one is going to risk money here because no one knows what to do, and it's not low enough for you to put money in the game. What I always say, skin in the game. So you need this to happen. We need a crash. Now, I don't want to call it crash because it's just a retracement. A crash will be if we close below 24.55. Why? There are a couple questions you can see I'm sharing because it's important for you to start asking questions. This is how you're going to get ahead in the game of trading and investing. You need to ask the right questions. Why we need to go lower? Basically because there's another formation here. You already have, as I show you, you have the massive rotation. This rotation goes from 2018 all the way to the present. Almost, it's a year and about 10 months. Now, this retracement is not going to be a crash, but it will make you cry. Why? Because it will look like we're about to go to hell. That's exactly what it looks like, and people will be scared. When people are scared, is that when we're coming in to buy. Right now, what you have to do if you're in Europe, one, you use CFDs. Those are contracts for differences. And you can trade the CFD of the Dow Jones, which is exactly the chart you have in front of me. This is DJ30. And you can make some money. The minimum contract, if I'm not mistaken, is 0.01. So, where is your risk if you want to take the short? And this short will be, please don't be scared, 2,200 points to the downside. Why? Because the market has to drop enough to attract buyers. When the market did that, let's see it together. Okay, let's remove everything. Take a look at this. 1,000, almost 2,000 points. Attractive enough, then we have the push to the high, new high. 2,200 points, and then what we have? Push to the high, new high, or almost the new high. This one, big extreme, but before that, it attracted enough liquidity, and this was 2,700 points. Let me take a look here, this retracement, this pullback. 3,000, so this level, because at the end it closed here, 2,300 points. Now, it's always important for you to work on weekly and monthly charts. You want to look at the big picture like an eagle. You need to have a vision of what is happening. And now that we have this price rotation, we know that there's a middle point, and the middle point is the last pullback. Where's the last pullback? Where do you think? May 2019. That's the last pullback, and then we have this new high. Let's see how, in reality, moving from this previous high, we only have about 645 points. It's not a lot. That is not a lot. And then we have a double resistance here, and of course we have the correction. Now, the other thing that no one is talking about is this pretty much inverted head and shoulders. Inverted head and shoulders. Shoulder, head, and here comes again the question. How deep is going to be this shoulder? Now, it can be here. I highly doubt it because there are another fundamental, the asset correlation study with the dollar versus the Japanese yen that tells you that this is not true. Something has to give here. And this one can come all the way to this level, close to this level, and then we have the reversal. That will take place in November and December. So we're going to get our Santa Claus rally. How's it going to happen? Probably a deal with China. Some sort of partial deal that will sound good enough. And also the drop cases on impeachment against Donald Trump, President Donald Trump. When that happens, then we'll have the reversal. And that, I will say, will take us to 28,000. It will set a new record and everyone will be happy. But before that, again, for the third time, you're going to cry. The reason why people are going to cry is because this 2,200 point drop estimated will be so nasty that will make a lot of securities attractive enough again. But before that, people will be scared. Retail traders sometimes don't get what the market is for. The market is not ready to speculate. That's a second and a third reality of what you can do in the markets. The markets have been designed for companies to be, what's the word? Think about like sponsor. You need to grow, you go to the stock market, you make your shares public, and then you decide what to do with that new round of cash that you took from the public in the form of shares. So that's what it is. And now we're speculating. If we're speculating, again, probably third, fourth time repeating this is too high for you to buy. We need this to go down at least 2,000 points. It could be, as I said, 2,200 points, even better. And then prices will be good enough. You will see companies like Facebook, just to give you a name, Facebook would probably drop 20%. And that will be good because basically, just to give you an idea, in the case of Facebook, apparently the new cryptocurrency that they had in mind is not going to go anywhere. So Don't pay attention. Who is, just jumping out of the boat? I think MasterCard, Visa, they're saying no to the project. They have their own ideas. So that actually is going to be bad news for Facebook. And that will make the company attractive. If it drops 20, 25%, that will be good enough. And it's the same with the Dow Jones. So So if you're looking at this, remember, there is the price rotation. I'm going to remove the pencil. Let's go bring this back. You have the price rotation, and then you have this last pullback. This last pullback creates a range. This range goes all the way, and is a minor bearish rotation. It's about 2,800 points. Now, of course, we don't want that to go that low. It can go all the way to 24,790. Or it can actually land here, and beautifully will create an M or create a W, depends how you want to see it. And that W, for example, let me just draw it for you. You have here, let me bring the pencil. Here, well, something like that. Actually, it will be more like an M in this case. The M, and then prices skyrocket. So that's the idea. And I wanted to share it with you because I'm preparing the war room 3 stocks. I have 3 picks that I'm positive I'm gonna make 200% on your money. If you want to know that, please just put just typing in the comments, I want to know that. And we're gonna go directly and contact you so you can be part of a special webinar that we'll have about the war room and the 3 picks I have in the stock market that will have the opportunity to make 2 times your money, even 5 times your money in less than 5 weeks. We're gonna take advantage of this drop in the market. I already said for you, for the audience in Europe, what you have to use. There's a short opportunity in the Dow Jones, and I'm positive we're looking at the Dow Jones in the next 4 weeks. Let me just write it down. To go down 2,200 points. I know it's a surprise. No one is talking about this. Again, it's not a market crash. It's a deeper correction that will scare everyone out there, and I'm positive will make you cry. But if you don't want to cry, I urge you to put your name on the comments. Make sure you say I want to be part of the webinar. I'm gonna have a webinar when I'm gonna share with you 3 picks. You don't have an idea who this, what are these companies, and they're easy to work with, and it will be very easy for us to position ourselves in the next week, upcoming week, and get short those and take advantage of this drop. I'm positive a lot of people are gonna suffer, but those that are in the war room, I guarantee you they know about this. Mainly because I apply a lot of different strategies. My main core strategy, price rotation. If you don't believe me, I'm going to talk about price rotation in another video that you will be watching right now, where I discuss gold and how low I think gold will go. It already went down $40 from the moment I publish my analysis based on price rotation. Some comments that were joking that gold will never go down. And it went down. It doesn't go down because I say so. It's because prices need to rotate. Every time you see a price, there's a live price decided by humans. It doesn't matter how many algorithms are out there. And the final message I want to let you know is that when you're part of the war room is just an active kind of training finance boot camp. I don't know if I actually call that, but it's not a trading room. It's not a trading course. It's a day-to-day, week-by-week, month-by-month training that you put yourself through to improve your trading, investing, and a consequence, eventually you make better life decisions, better choices. But that comes later. And this is the type of work I look into the war room. I look at all this price rotation, different levels. I sneak in, analyze, pick information from the best minds, best training and investing minds right now in the world, and translate that in a way that you can understand, and find those little things that others, they don't have time or they just don't want to talk about it. So I want to be one of the few that lets you know in advance that the market is about to crash. Deep correction, deep retracement. Don't be scared. And if you position yourself correctly, I bet you will not have to cry. Okay? See you guys on the next video. Once again, for the War Room, Jose Ricaurte, Jaén.